Ladies and gentlemen, now let's talk about VC investments in the mobility landscape. Which tech clusters are booming in 2022 and what's next? Now, to share their ideas on this topic, I would like to welcome Bryony Cooper, Managing Partner and Chief Acceleration Officer at ArkleyBrink VC, Laura Fox, General Manager, City Bike at Lyft Bikes and Scooters, who will be joining us virtually, and our discussion moderator, Oliver Skopec, CEO of Boxes. Please welcome to the stage.
Thank you.
And I'll leave it to you guys. Thank you.
Thank you.
Shall I go ahead?
Thank you. Welcome to our panel. And hello, Laura. Nice to see you. I think we're talking to you from Austin today. Is that correct?
I can see myself like an evil, I don't know, figure hovering above you.
Great. Well, we can see you as well. Bryony, welcome here on stage. Audience, welcome to this panel discussion. Thank you for the kind introduction as well. That gives us more time to dive straight into the topic. However, this seems more difficult than it probably could be because even the title of this conference, the Urban Tech Conference, describes a phenomenon that basically puts the great task in front of all investors to really map out this converging landscape of trends and merging technologies. Because just a few years ago, investments in mobility were really investments in solely mobility-related business models or technologies, but now we see all of this coming together with much higher environmental consciousness, with trends in the construction tech areas, and we've seen a lot of discussions already here on site on the energy sector as well. So to kick this off and without any further introductions, I think after the kind of introduction we already had, I would like to direct my first question to you, Laura, because in our pre-discussion you mentioned the mobility framework that you recently established and use in your discussions with different stakeholders, such as governmental representatives and so on, to ease this really diverse landscape of terminology and trends. So would you mind sharing a bit of that framework and how you mapped it out?
Yeah, definitely. And this framework is in part instigated by a couple of things. One, when we think about urban mobility and climate reduction, what we see is a very large focus on electric vehicles, which are a necessary part of the transition and where we need to get people to move, but we also need to get people to drive less and move to more sustainable modes of transportation, number one. And that's starting to be influenced by regulatory environments requiring cities, governments, companies to move faster when we think about those kinds of transition points. And so I'm sure at some point we'll talk about the regulatory environment, and excited to get into that. But I think the result of that is that we need more infrastructure investment, more fundamental reimagining of the status quo, and more incentives for people to change behavior. And so one of the things that I've struggled with is exactly to your point, how do we have a common framework and a common language across startups, corporates, investors, and government, who oftentimes speak in very different ways, and what can that look like? So a mental model that I've started using is an urban mobility as climate tech stack, which I call the MORE framework. And so there's 4 elements of that framework, and I'll start from the bottom. On E is enable. So how do we allow governments and businesses and individuals to assess, measure, and plan mobility interventions, from congestion reduction to climate mitigation and reduction, and what does that look like? So both from the upfront phase to the ongoing, how am I doing against that? Second is rebuild. There's a staggering stat from the Rockefeller Foundation that 75% of urban infrastructure needed by 2050 doesn't exist today. So major problem and opportunity as we think about especially the effects of climate change. And infrastructure can be a digital layer, something like how we manage our streets, what modes we allow, where, how we control them, to physical infrastructure, from kind of major infrastructure projects to the materials for those infrastructure projects like sustainable concrete and things like that. Third part of the MORE framework is offer. This is the space that I spend most of my day job in. So I think it's very fun, of course. But these are the things that we probably feel more familiar with. So urban mobility solutions that help people get around, from innovations in transit, microtransit, and pedestrian access to micromobility and lightweight vehicles. So there's a pretty big range there. And last but not least, in the MORE framework is maintain. I know a lot of people don't like to talk about maintenance because it's not sexy. As someone who runs a large urban transportation network and have issues that can keep me up all night, I definitely think that maintenance is really sexy, and it's incredibly important when we think about actually achieving some of the climate mitigation and reduction goals that we have. So lots of things in this space, from how we think about grid management to batteries, EV infrastructure, and more.
Yeah, that's great. And let me just pick on that very last comment of yours, because I also do believe that maintenance and infrastructure management and fleet management is a bottleneck in many cases to bring these technologies and businesses forward. So I might slide in a bit of more introductory content during the discussion, because I happen to know that before you, Bryony, moved into your role as an investor with ArkleyBrink, where you're focusing on early stage companies, IoT focused and hardware enabled tech businesses. You were a founder yourself, and I believe the company's name was T-Dispatch, and it was about the public transport taxi business. Now, we've seen a lot of that growing over the past years, but along with all kinds of fleets entering our cities, free-floating fleets, station-based fleets, gig job economy fleets, and also looking at a bit from my prior perspective in doing corporate M&A from an automotive OEM's perspective, I think the maintenance is where the technology and the human, the HR, the demand for driving these trends forward meet. So what's your take on this, Bryony, from your perspective at ArkleyBrink? What kind of trends do you see in being pitched to you, or deals happening that kind of ease the management of fleets and really getting the unit economics of these new mobility concepts to work?
Yeah. I guess some of the trends we've seen in the last couple of years and still now recently is a lot to do with last mile delivery, because of course goods and services being delivered to our door is something that everybody wants immediately now. We want instant gratification, and that might be through cargo bikes and e-bikes, or it might be through drones. But then that leads us back again to the word that keeps coming up at this conference is about infrastructure, and this is actually where we need more investment, because if you're having drone deliveries, which already huge companies like Amazon have invested a lot into, you need to have actually places where those drones can charge and can drop off. So I think infrastructure is really the next missing piece that we need to work on in terms of what we're going to invest in to facilitate it. Because when you look, you mentioned at the beginning, looking at the whole bigger picture of how the city planning works and how all of the moving parts, like the literally moving parts, come together, it's also difficult to look at how do startups differentiate themselves from other competitors. Because if you say, for example, with electric vehicles, we need EV infrastructure and charging infrastructure, but I've seen so many startups that want to build that infrastructure, and who's going to be the winner? So then you have to start looking at other aspects, like what is their business model? Do they have a secondary business, like, for example, maybe selling advertising on the, on the chargers, or maybe they have some secondary layer. I've seen, for example, where you can share energy with other drivers. So there's been some really interesting, innovative business models, and now it's waiting to see who's going to win out there.
Yes, Laura. Let me get back to you with one point that I would like to take from that. I would open the hypothesis that a lot of the business models that we are seeing in this space are hot fixes because of the lack of infrastructure. We know once infrastructure, in terms of charging and energy, but also infrastructure that is purely dependent on the change of our urban landscapes in terms of parking or extra bike lanes or name it. We know what this could look like in 10, 15 years, and that is oftentimes the time frame that also a VC fund would be able to bet on. And then there are so many solutions to help us along the way, kind of do something about it now and share your parking spot on a platform. We've been able to watch a couple of really interesting startup pitches. And as it is correctly done from a startup's perspective, you find your niche problem, you stick it to that, and you grow from there. But the bet from the VC side obviously is always, where is that a dead end, or can that actually be merged into one of the long-term developments, and who's then the big guy eating that up? So my question to you, as you are one of the very few companies who've raised more than $1 billion in venture capital with Lyft yourself. I mean, you must be looking at acquisitions of your own, and you see probably a lot of deals happening around you. What are the ones that you think can survive this bridging time until we are there in terms of our infrastructure, and where do you see some mistakes being made with just too short-handed models?
Yeah, I think that idea of the bridge between what we have as physical infrastructure today and how we use it better that you're speaking to and Bryony mentioned is fascinating. And there's probably two use cases that I could bring up in this instance. One is just thinking about how we manage our streets. As Bryony mentioned, things like delivery are exploding. In New York City alone last year, we had 3.6 million deliveries a day, which is the equivalent of every other person receiving a delivery every single day. And that's grown about 2x over the last 2 years too. And so this area is exploding. We also know that there's, more and more people taking bikes and scooters. There's more demand for protected busways and others. But then when we look back at a city like New York and what the physical infrastructure offers, we have 75% of street space dedicated to vehicles, 24% to sidewalks, and just 1% dedicated to other use cases. So today that's car-free bus lanes, bike lanes, and others. And so how do you take the infrastructure that you have and manage it better so you can look at things like commercial loading zones more efficiently, better regulate double parking, or trucks parked in bike lanes or in areas where they shouldn't be. And so I think there's a lot of innovation there. I'm in Austin right now for Move, and there's a startup here called VC that I think is doing a really interesting version on what I'll call Curb Management Plus, where they essentially look at, if I'm a city, I can look at data and intel that's coming in through the curb in terms of what are, and they do this all through solar-powered computer vision that have license plate readers. So what is happening at the curb? How do I manage and how do I price usage of the curb for commercial use cases, which could be extended to private in the future? And then if I want to look at usage patterns, could I as a city then understand how that space is being used and then make larger scale infrastructure investments as one side? And then on the other side, they also allow for automated enforcement through that license plate reader technology where you can enforce on the curb related to pricing. You could enforce violations in other types of vehicle lanes and others. So I think that kind of management, real time of the curb that also then informs how to make those future infrastructure investments is fascinating. Second use case that I think is really fascinating is, and this is true in the US and many other places, when we think about this big transition that we're making from ICE to electric on the big electric vehicle side, one of the key pain points right now is that our electrical grids are just not set up from a capacity and infrastructure perspective to support that. And so it's estimated that it would cost about $125 billion to upgrade the US electric grid to support everyone who has an ICE vehicle today moving to electric. And the largest infrastructure bill in decades that just happened this past year only dedicated $5 billion to it. And so for me, these are personal use cases too. I'm originally from Chicago in the US, and my dad proudly told me last week that, he's on, an ordering system to receive his first EV next year. And it got touchy quickly because I tried to talk about how that's a nuanced conversation. Actually, in Chicago, it's better to get a hybrid car than an electric. And it didn't make sense to him because everything else that he's hearing about is telling him to move to electric as quickly as possible. And that's the biggest thing that he can do for the environment right now. Yeah. And so when we think about for individuals and also for fleet operators, how in a moment of constrained infrastructure and then also fluctuating prices because of that constrained infrastructure, how do they, operate well in that kind of an environment? And so a lot of the kind of grid management technology is pretty fascinating on that regard. So there's a number of startups from Amp Control, Amply Power, Via Power, and others who are looking at, especially for fleet operators who have a schedule, need to deploy fleets, but don't want to be completely killed on their OpEx, right, by 400% fluctuating energy prices, to effectively charge at low periods of the grid, to recommend vehicle to grid times when peak energy is high, to get rebates, to kind of reduce costs in other moments. And also, again, digital infrastructure management, allow companies to know when some of that infrastructure is going down and when it's time to repair it, to make sure that they have good vehicle uptime. And so I think that innovations like this, when we think about these difficult transition moments in infrastructure itself, are going to be really important.
Yes. Thank you very much for those insights. And let me get back to one topic that we quickly touched before that, and that's the role of platform businesses. And I mean, if we talk about building infrastructure, obviously there are certain network effects necessary for that to make sense. We're talking open platforms, we're talking some standardization, and the question here really usually becomes, where does competition help and where does competition hinder? If we have public investments involved in infrastructure, what kind of ownership should the public sector have in that? And I mean, it's with these topics, whether we're talking parking, charging, or other infrastructural elements, it's a little bit like social networking, right? It's only fun if everyone is involved. So, Bryony, maybe with the businesses that you're looking at, if there is a platform business, or like, how do you see this conflict or this convergence, this divergence between competition and someone can eventually grow and own, let's say the parking management business for a whole city to, I don't know, a market cap of 6%, and then do M&A, or how much do you see, and also maybe in respect to our shared efforts and really putting climate first here and not lose time over competition, how do you see initiatives that come from the public sector, or that leave less space for competition? And I mean, this must be less interesting for you as an investor, but it builds more quickly towards the situation where we'd like to be in, having that infrastructure so we can actually do some real business, right?
Yeah.
How do you see that?
So on the platform level, I got to see this firsthand from the last years running T-Dispatch, actually, because we had a fleet management system that was a cloud-based software. But at that time, so we started the company back in 2012, and this was right at the beginning, as I mentioned, as the Uber and the Lyft revolution. So there were so many different new players and new brands coming into the space, especially on the B2C level of offering rides or deliveries. And at that time, there was really no aggregation. Everyone was out for themselves. And then we got to witness firsthand saying, okay, we need to see some aggregation here, otherwise it's not going to work. Nobody wants to have 10 different apps on their phone where they have to upload their personal data and their credit card into every one. So now, finally, in the last couple of years, we saw that. So even the big players like Google, you can now book your Uber, you can book your Lime scooter, all from the same place. But of course, having the government buy-in of the local legislation is really difficult as well, because I think sometimes they are a bit more slow to adopt new technologies. I think the innovation and the new technology is not a problem on the startup side, but trying to work, if you need to work B2G and actually have the buy-in from public spaces, they have so much legislation and so much hierarchies within the government sector that it's not easy for them to just make a switch and to be as agile as a startup can be. So that's where we're really seeing this bottleneck, and we still haven't quite found a solution to that yet.
Yes, I mean, we can only applaud to the many public representatives that are at this conference opening the doors. Laura, I didn't want to cut you out.
Oh no, I just wanted to build on that because we're actually for City Bike, a public-private partnership with the City of New York. We're owned by Lyft, right? Fully private entity. Don't receive subsidies from the government, but are allowed to operate the only kind of bike share system within the City of New York. And I can say that can be a really good thing for private sector and for public sector, right? Because if, exactly to Bryony's point, as a consumer, if I'm in an environment in which there's 10 providers and those 10 providers are only allowed to have 200 devices across a massive city, I can't rely on that as a solution, right? There's no reliability. I can't transition in terms of mode. I wouldn't give up my car for that. Couldn't think about getting to the office. And so having a system and a public-private partnership in which you focus on, allowing like a longer term horizon and larger density is good on both sides. We just invested $100 million into the doubling of the city bike service area in New York City. We wouldn't do that, right, if there were a ton of different competitors around. It means that we're going to much lower density parts of the city. That again, if you're just in a small operators operating with small fleets, you couldn't manage that against the dense parts of the business model and of the system, and have a network in partnership with the city that ensures that anyone in New York City in the service area is less than a 5-minute walk away from a station. We have service level agreements with the government that, ensures strong reliability at those. And so I think that there are really win-wins in the way that we think about building scale at a city level and partnering strongly with government sector, and that we on the private sector and startup side shouldn't be afraid of that, and that there can be really important changes there. And I think that this is going to become increasingly important as we think about moving faster on climate.
Yes. Yeah, great. Thank you. The challenge as I entered our panel discussion is that there are a lot of things that we probably won't be able to talk about because it's so interconnected. I mean, we could be talking about mobility solutions and up in the air. Yeah, I mean, the volocopters of the world are really on a pace and so on. But let's eventually break the discussion down to one thing that we are all very familiar with and that still plays a very centered role in mobility, and that's simply the car. And I think we can put in brackets in the way that a lot of new categories of vehicles are emerging as cargo bikes or other smaller electrified vehicles, but cars/vehicles will infrastructure set aside, and business models that we've discussed, they will be at the core of many of these developments. That's also the reason why most of the investment during the recent years has actually gone into autonomous driving and really like deep tech problems to tackle. So my question is, and we can maybe approach this in a bit more playful way, as if we were, I don't know, in Tony Stark's or Elon Musk's basement or garage. But if we imagine the car or the vehicle, let me stick to that term, of the future, what do you to see are some of the features, some of the capabilities that vehicles of any category will be able to do to fit into this infrastructure, to fit into this environment in terms of connectivity, in terms of technology that is actually built inside in terms of eventually operating systems or things arising from it. So what will the vehicle be able to do, regardless of its category, in the next, 2-5 years, that is already an interesting bet for you guys from an investment point of view?
I think part of this is already roadmapped out because we're kind of halfway through a journey that's already been going on for the last 10 years when it comes to autonomous vehicles, right? So currently, In Germany, for example, it's at SAE level 3 out of a total 5 levels. So it basically means you still need to be alert and in the driver's seat, but you can be hands-off now. So if you're on the Autobahn, for example, where there's no speed limit, you could still be watching a movie or making a phone call. And so that's already been kind of roadmapped out for us to get to level 5 where it's fully autonomous. There's also going to be very different trends in terms of urban versus rural, because I think electric vehicles will be the main mode of transportation in rural areas, but in urban areas, I think we still need to focus a lot more on the public transport ecosystem as well, because obviously we want to encourage less people to be driving their own cars and do more sharing economy, for example. But I've seen a lot of interesting technologies come across, so things like heads-up display. I think we kind of imagined that by 2022 we would already have some of these technologies and it would be a bit more like Minority Report, you know, with everything up in the air, but we're not quite there yet. But this is just the bells and whistles, to be honest.
Yeah. Laura, from your perspective, building fleets. I mean, what do you have to be? What do you have these vehicles to be ready for? Like, I mean, you're probably planning certain release batches. You know, like new versions of the vehicles that you're using and so on. Take us into the future. What is going to be on the road a year from now?
Yeah, I think Bryony's segmentation of rural versus urban is spot on and exactly where I sit too, and so couldn't agree more. And when I think about in-car tech that I find sexy, I think about it solving real problems. For example, the rate of deaths by vehicles in the US has grown 40% since 1990, so becoming a significant problem at the same time that many other countries have declined. And so I think that in-car vehicle tech that focuses on safety and driver alerts is pretty fascinating. It's technology that, you know, we've had, even things like speed governors have been in place, haven't been put in. And so I know that Stoneleigh Baptiste, and part of the Third Sphere, is on site today. They've invested in a company called Hass Alerts, which essentially works on it for both drivers and also for fleet operators. So on the individual driver side, it alerts you to road hazards, work zones, risk of collision and others, and that can include pedestrians, cyclists, and others. So it gives you a little bit more of that kind of heads up, but from a safety perspective. And then on the fleet operator side, allows for kind of real-time fleet visibility and management for a safer operation. So again, work zones, road hazards, better routing, and all of that. And so I think some of that management of safety of vehicles, especially in urban environments, is going to become increasingly important, especially as we start making the transition to autonomous.
Great, thank you for that. I would really like to use the last couple of minutes that we have to eventually take a couple of questions from the audience, if there are any. Since I don't know if that's the case. If not, then we don't have to worry about the microphone situation. But or comments. I mean, we have experts in the room, I assume. So
I would
feel
throw
free
in
to
two more points, and we don't have time to dive into them. But just things to consider when we're implementing these new technologies into our cars. One of them is data security. That should always be mentioned, because now our cars are like one giant computer that is monitoring everything. You've got eye tracking and movement tracking, and how much of that data is anonymous and how much do we want to share. And even with things like speed limit controls, I mean, some people believe that we should just be prompted when we're going too fast. Others believe that, as new cars are actually happening, is that they can physically force you to slow down. So yeah, I think data privacy is one thing, and then ethics is another thing. When you're putting decision-making into the hands of AI, there needs to be a real standardized and agreed global, really, standard for what are the ethical implications if AI is making decisions that normally we as humans would make, and who's going to be liable for those decisions. So I'll just leave that to sit with you, because we don't have time to dive into it now.
All right, cool. Then let me just maybe use the last couple of minutes to pose a much too short-ended question to the both of you. But imagine you were signing a €5 million ticket in a Series A startup financing, and you have 3 business models to choose from. One is another sharing economy related business model. Let's say it's vehicle agnostic, but it's the platform, the sharing economy. The other is an AI business that maybe signs its first LOIs with OEMs and is trying to get into the car software. And the third is about energy efficiency in the grid, trying to, I don't know, either buffer electricity for charging points or somehow improve it with additional technology. Which of these three companies would you each invest your 5 million Series A ticket in, and why?
I would invest in the energy grid. AI investments we've already done, so I can say been there, done that. And I think the sharing economy, the market's pretty saturated already as it is. There's been so much money poured into that, so yeah, I would go for the energy.
Yeah, same as both an operator in the shared space, as well as someone who looks at the space more broadly, and all of the pain points we've just discussed today. Grid management is incredibly top of mind.
Great. So, dear audience, if you came to this panel wondering what the trends in mobility investments are and where you should be headed, we have a clear, the time is over for mobility related services, and we have a very clear focus on energy and grid coming not only from other urban tech related sectors as construction tech, but especially and also from the mobility sector. So we're all excited to hear more of this convergence, and I think we have some interesting people at the conference from energy provider, venture funds, etc. So this discussion will go beyond this stage, and I'd encourage you all to do so by networking, and thank you all for joining in on our session. And thank you to the both panelists. Thank you, Loris. Thank you, Bryony.
Thank you, Oliver.
Thank you, guys.